Good morning to all traders. I hope you're doing well wherever you're watching us from today. Welcome to another daily market insights video. My name is Stavros, and today I'm going to talk a little bit about risk as the 10-year US yields have fallen to over to 2017 lows at 2.39. Why that is? Well, do you remember last week's disappointing PMIs that we saw in Europe? They have increased the fears of slowing economies and they have dragged down the yields as investors now believe that Fed may have to cut rates in 2019 just to limit the recessionary pressures. What we can do, of course, is look no further than a pretty weak euro and as well as the yen crosses, as the euro is and has been weakening, okay, while yen becomes the currency of choice. Now, before we see what opportunities I have identified for the day, let's just see what we have on the economic calendar. It's not too much. The highlight of the day, of course, is the US GDP quarter on quarter. Not too major initial jobless claims. The German inflation figures are very important. And, of course, the pending home sales in the US. Note that losses, connected profits, and none of the recommendations here constitutes investment advice. Now, I have identified two very good, I wouldn't call them opportunities, but I have identified some very good chart patterns on CAD yen, which is going to start with, and also euro dollar. Now, on the CAD yen, we have completed a duplication of the first wave up around 85.30 or so, and at the same time, after breaking outside this triangle pattern ABCDE, we have pretty much validated the neckline of this head and shoulders pattern. Okay, after this dip, we had a break of the neckline, which is also a critical support level around the psychological 8250, and now we saw a retest right at this level. And normally, what is expected is a duplication of this wave at least. That would take prices down to around 79.50, which is also the 0.78 Fibonacci retracement of the full wave, as well as very close to the Fibonacci extension of this first wave, okay, at 79.55. Now, we are still far from these levels, 80 psychological even, I would say, but we get some validation signals that prices are a little bit bearish. Okay, down on the 1 hour chart, excuse me, just quickly to see what we have here. Okay, so the extension of this first wave has taken us down to the 3.61 extension for an impulse downward wave, and now we are have already corrected up to 82.70 or so. So from here, we are looking at another impulse wave to the downside, another correction, and you know the rest. We should be receiving further clues anyway. Now, what I want to mention here is just the trick on Bollinger Bands. Normally, when you see a breakout and you have this sort of very big range in volatility, of course, because of volatility, this normally is going to be duplicated when there is a break below this lower level. So once we see a break below the 81.37, it is very possible that we'll see another downward move of around 200 pips, because this is the distance between the lower and the upper Bollinger Band. Okay? Now, I do also get some supportive signals on the MACD histogram. Okay, there is some divergence here, but what I want to really see is that price is creating lower lows, okay, and this top trend line holding strong. If not, we could see, of course, prices going up to here, but I want to see this level giving in to bullish pressures for the bearish scenario to be validated. Okay, we'll have a double top over here, which is a very good indication. Now, let's jump quickly on euro dollar. Interesting pattern here as well. We saw a double move to the upside, the full wave. We are sitting near 158, which is psychological level, as well as the Fibonacci retracement. And we have just broken outside this very nice pattern. And we broke down to this support level, nearly failed, but very, very close. And now we see a retest right at this level, coupled with bearish signals, right? Multiple. We could be expecting prices to break lower towards 156. Obviously, we'll have this struggle first, but nevertheless, signals are bearish. Down on the 1 hour, we have had the first wave over here, and now most likely we're going to have a second wave down here. This will be a complete duplication of the first wave, which is 220 pips. Now, from this level, which is the break, okay, we saw a retest, and from here, this pip difference could take us down to around 157, which, as we said, is also a very good psychological level. At the same time, it is the extension, 161, of the first wave, okay, down here, 157. So this is a critical level for me. Do I get any validations from the MACD and RSI? Yes, we do. We have completed the impulse downside wave, and correction may have finished. It's not really clear because we missed the 161.8 plus this correction, the first pullback down to B, it wasn't too deep, which means I wouldn't be surprised if we see prices going a little bit higher for another retest, okay? What I want to pay attention to, of course, is that prices remain within this sort of channel or below this ascending trend line. Okay, if we break above this, then we're looking at reaching that trend line again. This would invalidate bears, okay, for the time being. Then the next level will be, of course, this, to invalidate. If that break, prices move above, then this whole opportunity is gone. I would be looking at 160 latest. I mean, that would be the final, okay, 160. Now, please do pay attention on those two pairs because we have very, very good patterns, okay? So it's Thursday today and tomorrow is Friday. We could expect some end of week flows start kicking in. Obviously, there will be some effects from the Euro GDP as well as the German inflation numbers that are coming out later on the day. Thank you very much for watching our daily video for another day. Feel free to subscribe to our channel. That's how you can stay updated about the markets. That's how you can have a look at the latest news and have a look at trading ideas that we'll publish on very often on our blog.